Welcome to our video on the top 5 tips for beginners to use the 5 EMA strategy on uptrends. The 5 EMA strategy is a very popular strategy and has proven to be effective in uptrending markets. Before using the 5 EMA strategy on uptrends, it is essential to understand what it is and how it works. EMA stands for exponential moving average, and it is one of the most popular technical indicators used in the financial markets. The 5 EMA represents the average of the past 5 days' closing prices for a particular asset. It helps traders identify trends and possible entry and exit points for trades. The second tip is to identify uptrending markets. Uptrending markets are when assets are consistently increasing in value over a period. One way of determining uptrending markets is by checking for higher highs and higher lows. Once you have identified this, it is now time to apply the 5 EMA strategy. The third tip is to use the 5 EMA as an entry signal. Once you have identified an uptrending market, wait for the asset's price to pull back to the 5 EMA. When the price touches the 5 EMA, it may indicate a possible entry signal for a long position. The fourth tip is to set stop loss and take profit levels. Stop loss is a risk management tool that helps traders limit their losses if the trade does not go as expected. Take profit, on the other hand, is a tool that helps traders lock in profits if the trade goes the way they anticipated. Setting these levels before entering a trade can help traders manage risk effectively. The fifth and final tip is to avoid overtrading. Overtrading can lead to emotional trading, which may result in losses. It is essential to have a trading plan and stick to it. Plan your trades and trade your plan. And there you have it, the top 5 tips for beginners to use the 5 EMA strategy on uptrends. Remember, trading involves risk, and it is essential to manage it effectively by using tools such as stop loss and take profit. Thank you for watching, and happy trading.